Welcome to this comprehensive beginner's guide to trading. In the next few minutes, we'll explore everything you need to get started, from the very definition of trading to the strategies that can help you succeed. At its core, trading is the act of buying and selling financial assets with the goal of profiting from their price movements. For example, if you believe the price of a stock will go up, you buy it. And if your prediction is correct, you sell it later for a profit. The key benefit is the potential for financial growth, but it's not without its risks. However, it's a common misconception that trading is a get-rich-quick scheme. The reality is that many beginners lose money. The two biggest pitfalls are a lack of education, jumping in without understanding the market, and making emotional decisions, like panic selling or getting greedy. This often leads to consistent losses. But don't let that discourage you. With the right knowledge, trading is a skill you can learn. It's not about gambling. It's about making informed decisions based on analysis. So, let's explore the financial markets you can trade. First up is the Forex market, where you trade currency pairs like the euro versus the US dollar. It's the largest market in the world and operates 24 hours a day, 5 days a week. Then there's the exciting world of cryptocurrencies. Assets like Bitcoin and Ethereum are known for their high volatility, which means there's potential for high returns, but also high risk. The stock market is where you can buy shares or ownership stakes in public companies like Apple or Tesla. When the company does well, the value of your shares can increase. Closely related are indices like the S&P 500 or NASDAQ. These are baskets of stocks that represent a sector or the market as a whole, allowing you to invest in a broader trend. Finally, we have commodities. These are raw materials like gold, oil, and agricultural products. Their prices are often influenced by global supply and demand, as well as major news events. Now that you know the what, let's dive into the how. How does trading actually work? You can profit in two main ways. The first is going long. You buy an asset expecting its price to rise, and then sell it for a profit. The second is going short. You borrow an asset, sell it at a high price, and then buy it back later at a lower price to return it, pocketing the difference. This allows you to profit even in a falling market. Spread is the difference between buy and sell prices. Leverage increases profit and loss. A good broker offers regulation, low spreads, fast execution, and a demo account. MetaTrader is essential. Candlestick charts show open, close, high, and low prices. Bullish means up, bearish means down. Support is where prices rise, resistance where they fall, created by market psychology. Understanding market structure like uptrends, downtrends, and ranges helps you trade with the trend. Technical analysis tools like trend lines and moving averages help confirm trends. Risk management is crucial. Never risk more than 1 to 2% per trade. Use stop loss and take profit orders. Trading psychology is vital. Overcome fear, greed, and overconfidence by following your plan. A winning trader has a comprehensive system combining rules, psychology, and risk management. Practice on a demo account to build confidence before starting small on a live account. Beware of scams promising guaranteed profits. If it sounds too good, it probably is. Trading is a skill, a long-term journey, and a disciplined game. No shortcuts. With proper learning, risk management, and consistency, trading can change your life.